What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we're going to do a technical analysis on the S&P 500 index, ticker symbol SPX, and we'll also do a technical analysis on the Nasdaq Index, ticker symbol IXIC. In addition to that, we'll also be looking into Jerome Powell's briefing today, and I'll go over 3 or 4 things that I wanted to bring to your guys' attention and kind of highlight exactly what he said and how that affected the markets moving forward. As always, if you guys enjoyed this video, please make sure to drop a like. It really helps out with the channel. Also subscribe if you're new, and make sure that you hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So the first thing we're going to talk about is the interest rate. So Jerome Powell and the Federal Reserve decided to leave interest rates unchanged around 0 and cited that the US economic growth is well below the pre-pandemic levels. So the FOMC, which is the Federal Open Market Committee, said that they're going to continue with their corporate debt purchase program, where they buy corporate bonds and they continue their liquidity and lending programs. In terms of the inflation, Jerome Powell essentially said that he does not see inflation on the horizon yet. And on the contrary, he sees inflation essentially dropping down to 1% and said that we might be affected or struggle with a disinflationary pressure more than an inflationary pressure. Now, for those of you who are not familiar with this, disinflationary essentially means a decrease in inflation, which is going to be measured by the CPI, which is a consumer price index, and that essentially takes the prices of a basket of goods and measures them over time. So if the overall prices for those goods increases, that means there's an increase in inflation, and vice versa. So now moving on, in my yesterday's market update video, I essentially went over the US dollar currency index and the relationship between gold and the dollar index, and how dollar has been selling off more recently and getting weaker, while gold is hitting and surging to new all-time highs. And as a result, many traders and investors are essentially betting that the central bank easing and the surge in debt is going to create and eventually lead to an inflationary period. So I guess we're just going to have to wait and find out if that actually happens, and if we are going to see an increase in inflation, or if you're going to see a disinflationary pressure like Jerome Powell mentioned. So next, Jerome Powell said, which was very critical for the markets, and he essentially said that we have the ability to do more. In the broad scheme of things, there will be more support needed from us and more fiscal policy. And last but not least, the biggest catalyst driving the markets today is when Powell essentially said that we are committed to using our full range of tools to support the economy in this challenging time. In addition to that, he also said that we have held our policy rate near 0 since mid-March and have stated that we will keep it there until we feel confident that the economy has weathered the recent events and is on track to achieve our maximum employment and price stability goals. So I'm not sure what those goals are, whether there's an employment figure or an unemployment rate that he has in mind, along with the price stability goals that he's mentioning. But that being said, let me know in the comment section down below, what do you guys think about this briefing, and what are some of the key takeaways that you think are really important for the markets and the US economy moving forward. Again, let me know in the comment section down below, and I would love to hear your guys' feedback. So now we're going to jump over to the S&P 500 and the Nasdaq Index and kind of map out those next key support and resistance levels that we need to watch remainder of the week. Alright guys, so here we are inside my TradingView platform, and this right here is going to be the S&P 500 index, again ticker symbol SPX. The 3000 level is going to continue to act our very strong level of demand and support, where we have bounced off of a couple times, and that level has continued to stay as a very strong bull camp. Moving forward, the 3150 is also going to be a very critical level of support that we have been following up with on my previous market updates. The 3180 to 3200 level, also a very strong level of support. You guys can see the markets, the S&P 500 in general was up over 1.24%, going up over 40 points, closing in on 3258. If you were to look at some of the SPY holdings, so this right here are going to be the SPY holdings, you can see that tech was doing well today. So AMD, Nvidia, Salesforce, Apple, Tesla, Twitter, Facebook, they were all up in the green. So was Google and Berkshire Hathaway, Amazon, Microsoft, Chevron, Wells Fargo, ExxonMobil. So tech, industrial, energy, and financials all doing incredibly well, essentially pushing the markets higher, which is why the S&P 500 essentially broke out of this resistance of 3230, which we had marked in my previous market updates. So this red rectangle and this red label was kind of like the resistance we were watching prior to today's trading session, which the S&P 500 has finally broken out of, which is what this big daily candle represents. So now moving forward on the daily chart, the 3280 level is going to be the next resistance that we need to kind of follow. And if you were to jump over to the 1 hour chart, you guys will know exactly what I am talking about, because that has been the level right here where we have previously gone rejected multiple times if you were to go back as far as July 22nd. So we did get rejected right around here, and then going back even further to July 21st when we hit that level at 3277 and then kind of sold off all the way down to the 3200 support. So in my previous market updates, I had mentioned the 3200 level of support being a very critical level and a level of demand where I personally see the S&P 500 bouncing off of. However, this right here is going to be where the markets opened today, right? So 9:30 a.m. This right here is going to be today's open. And coming in from yesterday, I had mentioned that the markets could potentially retest 3200 and then push up higher. But what happened instead was we didn't even bother coming all the way down to 3200, which is what I had foreseen, that we might retest that low, but we essentially just pushed up all the way. So this right here is going to be the hourly chart, and you can see that every single hour we were just pushing higher and higher and breaking out of some type of resistance on the day. But that being said, based on the current close at 3258, we have an upside of close to over 60 basis points if we were to go up and test 3280, which is where we have gone rejected multiple times in the past, and that's where our next bear cam sits, which is what this red rectangle represents along with this red price label, and this is where we have gone rejected in the past. Now moving forward, this 3230 level, which was previously acting as some type of resistance, you guys can go back as far as July 15th, we have gone rejected here, and then going back even further on July 13th, should, in my opinion, now start acting as a really strong support if you were to retest down to this level. So this right here is going to be the range within which the S&P 500 is potentially going to trade tomorrow and on Friday. And also remember that tomorrow we've got the big tech earnings like Amazon, Apple, and Google are going to be announcing their earnings, along with the second quarter GDP results and the initial claims from last week, all of which is going to be a driving force for the markets moving forward. And to give you guys a quick recap on the S&P 500, the 3280 level is where our next bear camp is going to be. The 3230 level is going to be the next support if you were to come down here and retest this level. So now going over the Nasdaq Index, that's going to be ticker symbol IXIC, and we have been following up with this pretty much every single day for the last few days as well. And this right here is going to be the double top resistance, or the double top for the Nasdaq Index, which sits right at 10,840, which is what this red rectangle and this red price label represents as an area of resistance. Now in terms of support, I had mentioned 10,200 level in last week's market update on Nasdaq, which did hold as support based on two different factors. The first one being this previous support acting as new support, and then also this horizontal trend line you guys see, which is what we have been following up with in all of my previous market updates, where the Nasdaq has essentially bounced off of multiple times, and it also did that right here when it essentially touched that ascending low or that higher low and then essentially pushed up. So now moving forward to where the Nasdaq is trading now, you can see that it's approaching some type of resistance at 10,567. And the reason I say that is because this right here has previously acted as some type of resistance, right? So going back as far as July 15th, we essentially hit that level and then pulled back close to over 2%. So we are right at that resistance at 10,540 to 10,550 level, right? So the Nasdaq was up over 1.3% on the day, and it closed at 10,542. So you can see how we are just approaching our next resistance. So the interesting thing for us to now watch is going to be whether the big tech earnings are able to push us out of this resistance, or if you're going to pull back down to this ascending low, or even down to this 10,200 support. So to give you guys a quick recap on the Nasdaq Index, the markets did trade higher. The Nasdaq is up over 1.3%. The next resistance we need to watch is right where the Nasdaq is trading, in between this red rectangle, which is going to be sitting at 10,550 to 10,600 level, which is what this previous resistance represents. If we do break out of this level, then of course our next resistance is going to be sitting at 10,800. If we do see some type of rejection and pullback at this resistance, then I can see the pattern essentially retesting this higher low, which is going to be sitting at $10,350 level. So if I were to put a price label right there, just so we have a really good understanding on what levels we're watching, this right here is going to be kind of like the next support that we need to watch based on previous patterns and based on the fact that it's making higher lows and an ascending low. I hope you guys enjoyed this video, and if you did, please make sure to drop a like and let me know in the comment section down below, what do you guys think about today's briefing from Jerome Powell, and what are some of the key takeaways for you. As always, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video.